Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with my co-host, James Mason. Before I get to James, I just want you to, in the comment section, let us know how you did on your trades yesterday with SDC, if it's a winner or if it's a loser, and EDSA. And then make sure you hit that like button. Good morning, James. How are you?
Todd, good morning. I'm doing well. How are you?
Good. Sorry to hold you up there, but I'm doing a little marketing company biz.
Okay. All right. So currently Dow futures are up 202 points. S&P is up 21 3/4 points. And don't be fooled. This is not the freaking bottom, everybody. So many people are going to scream, this is the bottom. Buy the dip. And well, you know what? In a couple months from now, those people are going to be gone out of the market, especially all those gurus. And it's going to be hilarious because they're going to blow up their accounts. All right. So let's just go ahead and get into it. There's really not much pre-market at all.
No, there isn't.
I mean, pre-market sucks. And that is usually where it all starts for us and making money. But yeah, pre-market sucks today. The market is going to be the market overall is volatile. But I'm going to have to go out on a limb and say today is going to be choppy. And let me just go and share my chart, and I'll explain why.
All right, let's get into it.
All right, so here are the Dow futures, and this is the daily chart. Now, like I spoke about yesterday, what I'm expecting to see here. So you can see these are my Bollinger Band lines. You know, this green line, this blue line is the middle Bollinger Band line, and then the red line is the lower line. Now, the white line is the 9 EMA, and this pink line, I threw it up there, it's the 50 EMA. I still use the 200 EMA. It's right down here, but we ain't going to talk about it just yet. So we can see this crossover with that 9 EMA and the 50 EMA. It's one of the easy ways that I knew that the market was going to go down. And here we are. Now, what I'm looking to see is this bounce off of this support. These daily candlesticks come up here to either this 9 EMA or potentially that middle Bollinger Band line, because that middle Bollinger Band line is going to keep hooking over since these are lagging indicators. So as the days progress, sometime this week, I'd like to see these daily candlesticks come up here, either touch this 9 EMA and hold up right there and curl over. And then once I start to see, it not really like pushing past it on the daily chart, I'll know that's confirmation that the market is going to drop a lot harder. And let's go back to, hold on a second. There we go. Let's go back to when the pandemic started. And I showed y'all this yesterday. Again, this is what I'm looking for right here. Now, whether it happens on that 9 EMA or that middle Bollinger Band line, I don't know, nor do I care. I just need to see which line it's going to go up to and see if it holds up for a possible rejection. Now, once it sits up like this and it keeps curling over, that's when I know it's showtime to keep buying those puts and just write it down. Now, I'll know when the bottom is in. When this thing sells off, it's going to sell off, do its thing. And then when we start seeing that just show sharp movements up that actually close above either that 9 EMA line or that middle Bollinger Band line that it got rejected off of, that's when I know the bottom is in. So that's literally the setup for however long this takes to happen. Now let's just say maybe some of the gurus might be right. If they are right, they just got lucky, because we all know that they really don't know crap, which is also why they can't. Like, let's be real. We know they can't trade. So anyways, let's just say they get right. And this is a bounce because Jerome Powell, the Fed chair, decides to come in and release the plunge protection team to start pumping money into the system. And it does bounce.
You call them the plunge protection team?
Yeah, that's their official name.
All right, I like it.
PPT. That's actually what it's called, Plunge Protection Team.
All right, I've never heard that term.
Oh, okay. Yeah, that's what it's really called. So let's say he releases his goons to come in and save the market, which we all know that's just fluff. They're actually just creating a false bottom in the market so they can go ahead and get out of their long positions and readjust to ride this bad boy down. If we're going to be truthful, we have to be truthful. That's what's going on. Because at the end of the day, the government isn't here to save us. They're only here for their own benefit. So let's say that they do create a bottom and it bounces. Well, if that happens, then look at all this resistance we have up here. The market is actually not going to go bullish until it breaks these highs again. So let's say we have a false bottom, it does bounce, and it breaks above that 9 EMA, 50 EMA in that middle Bollinger Band line, and it comes back up here to test this. Honestly, I'm probably going to get short again up here because a bounce like that up here with everything going on, we now have strong macro events. And if you guys remember back when the Great Recession started, technically started in 07, when Lehman Brothers went under. If you guys remember that far back, it pulled the market down, and then everybody was like, oh, it's okay. And then it bounced, and the plunge protection team came in then and, made everybody feel like everything was good. And then it was about a month later that the market just started really, really getting screwy. If you guys have read the headlines about that Chinese company, what is it, Everglen or something like that? I don't know. I don't have it up right now. But that real estate property company in China that is going bottoms up. They have $300 billion of debt that they're going to default on. And all of the big wigs on Wall Street trying to say, oh, this isn't going to be a big deal. This ain't going to influence everything. They say that every time when something for real is going to influence everything because they're trying to control the fear since they have a vested interest in everything going on. They just have to get their ducks in a row. So they're all screaming that everything is cool. This is no big deal. This is not going to pull anything down. But they're the fourth largest real estate developer in the world. And when you have the fourth largest real estate developer in the world who's going to default on $300 billion, bad shit's going to happen. I mean, that's all there's to it. It's going to ripple over into the United States. Eventually, this is going to cause, in my opinion, a global recession. It's going to cause a housing market collapse, and then everything else that's going to fall along with it. So this is us preparing right now for this. And you really just have to be ready. Like if you're trying to still buy in and catch the dip, whatever. Imagine all those people back in 2008 who were trying to buy the dip and they had to buy that shit. They had to keep buying a dip for another year. I mean, it took them years about a year and a half, 2 years to actually break even again. So, yeah. So that's what I'm looking for overall with the market. Short term, looking for that rejection, and then my long-term outlook right there. So do we have any questions?
Well, let's go to the comments and see. Good morning, Jonathan. Thank you for the $5 tip.
Brian Lashford wrote 300 billion in debt. Our government calls that a Tuesday. Yeah, that's a Tuesday morning. That's funny. Let's see what we got going on in those comments.
John Stevenson, good morning, Jason and Todd. Is that an inside joke?
What's that?
John called you Jason this morning.
Yeah. I'll be honest, like it irks me because like even other companies, I will not respond to a company who addresses me as Jason. It's James Mason. Damn.
That's hilarious.
Can you people not damn read shit? It's James Mason. Read shit.
There's a few people who made money on a little scratch on the SDC trade. Good. Glad to see that. Nice. Luke made a little bit. Jonathan made big winner. Jordan wants to see LNE's up 3% for no reason. I'm not sure. All right. Take a look at ticker. We talked about this before in the past, but the ticker that's on my radar is NNVC. NNVC.
Oh, this thing is going to be shorted.
Oh, you're talking my language now.
Well, hold on a second. Let me dig into it a little bit more. You said that, and I actually already had it up on another chart.
Yeah, we talked about it a couple days ago, but I think it's got fair possibilities.
11.5 million shares outstanding. You know what? Actually, guys, I'm just going to stop talking about the float because I don't know if y'all know. Everybody in the market is doing this crap wrong when they're searching for the float, especially like short float percent. And the reason why, and I know people are like, no, I'm not wrong. I know what I'm doing. It's not the outstanding short percent. No, it is outstanding short percent. You just don't know. And the reason why is the float doesn't update but like once a year. If you look at a stock, I mean, for instance, I don't know. What has a lot of demand right now? I can't even think of something off the top of my head that has a lot of demand that people for real are buying up. Well, okay, let's just talk about BBIG. A lot of people bought a crap ton of shares in BBIG. And we saw how that pushed up a few days back, a week or so ago. The float doesn't change because it only updates like once a year. So that's why you have to go off the outstanding shares because the outstanding shares will change every time they change. So why wouldn't you go off of what's accurate instead of
5? What's up, everybody? Hey,
is this your first day? Huh?
What was that? Was that you?
That was you, and you know it. Don't even damn lie. Thank you for interrupting me. But anyways, yeah. So like, why would you not go with what's accurate? You know, there's no way to know what the float is until they update it, and they only do it like once a year. I mean, you see all these tickers that are going sky high, like short squeezing. If the float is literally almost the same amount as outstanding shares, then that ticker wouldn't be moving up at all. For instance, like, okay, actually, Todd, before we talk about this is a teaching moment. PRIT. Excuse me, guys. So this is a $5 stock. I can pull up PRIT, and it's going to tell me that the float, okay, the shares outstanding, 83.2 million shares. The float, 1.1 million. If this thing only had a float of 1.1 million shares, it would not be $5. This thing would be breaking probably all-time highs.
Absolutely.
So stop going off the float. It's trash. People don't know what the hell they're talking about when they keep talking and saying the float with anything. So that's why I always go off of outstanding shares since it's the most accurate thing. Now, Todd, back to NNVC. All right. So outstanding shares, 11.5 million. And short interest, not really much on the short interest side, about 440,000 shares. Let's see.
It just halted.
Oh, so we got a pre-market halt.
Yeah.
Oh hell, I wouldn't short this then.
Yeah, well, I did. When I first brought it up, it just pre-market halted at the start of you started talking about the other stuff. So there's news pending, and so now I don't know what's going on.
Did you take a short position?
I have not taken a position. No, I was.
Oh, man.
I haven't even bought locates yet. I was.
That would have sucked.
Yeah, that would have.
Okay, well, since they're I was actually, when I first looked at this with how much it had gapped up and how my chart a little bit minimized, I thought this was like a downtrend until I pulled out and zoomed out, whatever. It's not really a downtrend. These people who have been in this has just been trending sideways. This thing actually might run with this low outstanding share structure, and it's just been trending sideways. This is actually pretty decent. So I would look for overall target price around 10.50. No, I'm not saying it's going to go up there, but it could. I mean, hell, it could break higher than that.
Actually, I think the news is going to play an important piece of whatever's going on here.
Oh, for sure. That's why you got to wait for the news to come out to see what it says.
Right.
So if it's positive, and clearly somebody knows something for it to be up 35% pre-market.
Yep.
So this would be worth watching. I'd watch it above. So if you guys do this, you're gonna have to be quick. Like if you're at your jobs, don't even bother wasting your time because you won't be able to keep up. And I'm not saying that to be mean. I'm just saying this to save y'all money because you're just not gonna be able to keep up. Especially if you're trying to trade on your phone. It's just not gonna be practical for how this is gonna work out. Let's say they come out and whatever news that they release let's say they release good news. With this thing only having 11.5 million shares outstanding, and it's already went up pre-market like this, somebody has known something here. But what I would look for personally is that break above 575. But be freaking careful because if this thing breaks below 512, that's in jeopardy of it breaking down. So just keep that in mind. Now, overall target price would be 10.53. And again, there's no guarantee it's going to do that. But at the same time, it could blow past that. We just don't know. You just don't know the stock market. Like, don't get me wrong. Like, I'm a pretty good chartist. And I can point out, like, potential target prices. But I'd say 90% of the time, a lot of my stuff, like, it doesn't hit the full target price. And it's not that I'm screwing up. It's just I'm not a psychic. I don't know how high it's going to go up. Like there's so many parameters into a trade that will justify if something's going to run or not. So with this one trending sideways for so long, I believe this one does have potential. Originally, I was going to call it a bearish trade because I thought it was actually downtrend until I zoomed out. But I believe this one could have potential. And when I say potential, this thing probably, with how I am and how I trade, I would only focus on this one today personally. Maybe we can revisit this one tomorrow. So let's go and wrap this up, Todd. That's all I have to say this morning. Do you have anything else?
No. Obviously, from the dump yesterday and the bounce in the market today, one of Warren Buffett's number one rules is protect your capital. So sometimes the best trade is a no trade. So be smart, be careful. And I'm going to keep my eye on this NNVC and see what the news is and make a game time decision which way I'm going to go possibly. All
right, guys. So appreciate y'all tuning in this morning. Remember, trade. Oh, hold on. Brian Lashford, thank you for the tip. Oh, you know what? I wouldn't have showed this one if I'd have noticed you wrote Jason. Okay. You caught me slipping on that one. That's a good way to end the show right there, actually. That's funny. All right. So thanks, everyone, for tuning in today, and we will catch y'all in the next one.